Today, we're not just going to talk about credit scores. We are going to crack the code. We're building a clear, actionable blueprint to help you take total control of your FICO score in just 90 days. Seriously, no myths, no fluff, just the strategies that actually work.
And this right here, this really says it all, doesn't it? Because in the US, your access to almost everything, a house, a car, even launching a business, it all comes down to this one little 3-digit number. Understanding this kingdom is the very first step to conquering it.
So picture this. You and a friend, you both make the same money. You both want to buy the same $500,000 house. But your friend gets a 5.9% interest rate. And you get stuck with 7.8%. Why? The only thing that's different is your FICO score. And that tiny difference in percentage points, it could cost you over $100,000 in extra interest. That's not just a number, folks. That is a direct tax on your wealth, or a discount, depending on which side you land on. So here's our game plan. We've just seen the price of a bad score. Next, we're going to go inside the FICO kingdom to really understand what it is. Then, we'll break down the 5 factors that actually make up your score. After that, I'm going to give you that step-by-step 90-day blueprint, and we'll wrap up with some advanced strategies the real pros use. Let's do this.
Okay, let's pull back the curtain on this FICO score. What is this number that has so much power over our lives? At its core, it's pretty simple. The FICO score is just a 3-digit number, from a low of 300 to a perfect 850. For any lender, a bank, a credit card company, it's trying to answer one basic question. How likely are you to pay me back? That's it. It's a risk score, plain and simple.
And that score drops you into one of these buckets. Anything below 580 is considered poor, and honestly, it's going to be tough to get approved for much. The real goal for most of us is to get into that good or very good range, so 670 and up. But the magic, the place where you get the absolute best rates and deals, that happens in the excellent tier, 800 plus. That's the boss level we're aiming for.
Now, a lot of people think the FICO formula is some big, mysterious black box, but that's not really true. While the exact math is a secret, FICO is actually super clear about the 5 key things that make up your score. Let's break them down. Okay, now look at this. This is so important. See those 2 huge chunks of the pie? Payment history at 35% and credit utilization at 30%. Together, that's a massive 65% of your entire score. If you get these 2 things right, you are most of the way there. This is where you need to focus your energy. So let's talk about the king of all factors, payment history. It's exactly what it sounds like. Do you pay your bills on time? The penalty for messing this up is huge. Just one payment that's over 30 days late can knock 60, maybe even 100 points off your score. It is the absolute foundation of everything. All right, the second heavyweight is credit utilization. This is just the percentage of your available credit that you're currently using. So if you have a $10,000 limit and a $5,000 balance, you're at 50% utilization. Lenders get nervous when they see high numbers. Now, under 30% is okay, but the people with the highest scores, they live under 10%. Next up, at 15%, is the age of your credit history. It's the average age of all your accounts. A long history of paying your bills shows lenders that you're stable and reliable. This is exactly why you should almost never close your oldest credit card, even if you don't really use it. Then we've got your credit mix, worth 10%. Lenders like to see that you can handle different kinds of debt. So things like credit cards, which are revolving credit, and installment loans, like a car loan. But, and this is a big but, please don't go out and get a loan just to improve your mix. It's not worth it. And last, also at 10%, is new credit. Every time you officially apply for new credit, it puts what's called a hard inquiry on your report. Each one of those can cause a temporary little dip in your score, maybe 5 or 10 points. If you apply for a ton of credit all at once, you can look desperate, so you got to be strategic about it. Okay, so we've looked under the hood. We know the 5 factors that drive the score. The big question is, what do you do with this information? How do you take all this and actually use it to make your score go up, and fast? And this brings us to the blueprint, a clear 3-phase plan designed to get you real results in just 90 days. No more guesswork. This is a systematic approach where we hit the most important factors first. All right, phase 1, days 1 through 30, is all about damage control. You've got a 3-part mission. Step 1, get your intel. Go to annualcreditreport.com, that's the official free site, and pull your reports. You got to see what the lenders are seeing. Step 2, build your fortress. Log into every single one of your credit accounts and set up autopay for at least the minimum payment. This is your insurance policy. It guarantees you will never be late again. And step 3, go on the attack. Go after your credit utilization. Pay down those balances as low as you can and try to do it before your statement date. This one thing can give you the biggest, fastest boost right out of the gate. Now we move to phase 2, active score boosting. In this second month, you take those reports you've pulled and go through them with a fine-tooth comb. Look for errors. You have a legal right to dispute anything that's wrong, and if they remove it, your score can jump up fast. Next, think about this powerful strategy, becoming an authorized user on a family member's credit card. The key is it has to be an old card with a perfect payment history and a super low balance. You don't even have to touch the card. You just get to inherit all that good history onto your report.
Okay, with that blueprint in place, let's look at a couple of next-level moves, the kind of techniques the real credit experts use to push their scores to the absolute max.
And get this. This shows you just how powerful that authorized user strategy is. One study found that the average score increase was 108 points. That is not a small bump, my friend. That is a game changer. That's the kind of jump that can take you from a fair score all the way into the very good club overnight. Here's a secret weapon for anyone trying to get those elite level scores. It's called the AZIO method. It stands for all 0 except 1. Here's how it works. You pay off all your credit card balances to 0, except for 1. On that one card, you let a tiny balance report, like 1 or 2% of the limit. It's a way to perfectly optimize the utilization algorithm and can give you a quick 20 to 40 point boost right before you apply for something big like a mortgage. So let's end on this thought because it's the most important one. Your credit score isn't just about getting a loan. It's about the cost of your life. Bad credit is like a tax on everything you do, making it harder and harder to get ahead. But good credit, it does the exact opposite. It gives you access to cheap money, which is the tool people use to build wealth. So the question to leave you with is this. Is your score making your life more expensive, or are you building it to make wealth cheap?